Good morning. Welcome to Founders House. I am Bonny Ghosh. I'm the editorial director here at Inc. Thank you so much for joining us this morning. We have an exciting panel for you to kick off the day. And I'm going to actually let my panelists introduce themselves, even though I feel like they need no introduction.
I'm Daniel Lubetzky, founder of Kind Snacks and a few other things.
I'm Elle Lanning, and I'm, I guess, the method to his madness. I got to partner with Daniel at Kind Snacks for a dozen plus years, and now I run our privately held investment platform, Camino Partners.
And you want to hear from her more than from me because she, John Leahy, and a handful of others were really the force that helped Kind become what it became.
I actually wanted to dive right into that. I mean, you guys have quite a long relationship. At Elle, you have helped scale Kind from, I believe it was 20 million to a $1 billion company. Tell me a little bit about how the working relationship now has pivoted and changed.
Well, we're more efficient at disagreeing. That comes with time. I think, businesses like Kind and the scale it achieved wouldn't happen without what I call divergent thinking, which he excels at.
Polite word for crazy.
But managed lunacy, I guess. And so, you need that kind of dissonance in a business, I think, for it to accomplish really meaningful things. You need someone who can dream, bigger than the logical person would within that. But then they also have to have the self-awareness and introspection and invite those around them that manage it. I say, a lot of days it feels like my job is to make sure his wildest dreams do not come true. And it's really more about how do you stage and step those things out.
We call her Dr. No. She says, no, I'm Dr. Not Now.
Yeah.
Well,
By the way, Stacy Blakely is running the Builders Movement, and she's learning to work with me. So she's loving listening to Ellie talk about how illogical and crazy I am. She's like, yes, I noticed that before.
So I want to dive right in, right? This panel is about how investing smart right now. Talk a little bit about Camino Partners' growth strategy in investing and why you consider it a smart way to invest.
Yeah. So I would say in a lot of cases, we start with what we're trying to invest behind. And so for us, that high level, very macro thesis is enhancing consumers' lives. We were able to do that with Kind, and I think we like to do well by doing good. And I think that there are businesses that allow you to do that. And then I would say we try to take a very unique understanding of the businesses that we look at within that filter. And different than potentially typical capital provision who are incented to want you to need their money in the business, we really focus more on sustainable growth, right? And so, at Kind, Daniel and the team, we're able to scale to $1 billion with $6 million of primary capital investment.
Which we didn't even need or use. It was on the bank ledger. Not to brag or anything. Not that I'm proud.
And I think we're just coming out of this era that was kind of free money growth at all costs. So buy the growth and figure out the fundamentals later. I think that's never been a position or a strategy that we've subscribed to or we would push upon a founder or a management team.
And to translate this into English, the important thing for entrepreneurs is that if you get too much money, two really bad things can happen. Number one, you get diluted very early and then you own less of your company. And number two, too much money can actually be bad for nonprofits and for businesses. It is really true, you develop the worst disciplines because we learned that at Camp because prior to Kind, 10 years before, when I was running Peaceworks, nobody wanted to invest in me. And so I learned the hard way to manage inventory, to manage working capital, to use your brain and your creativity to outperform everybody, to work harder and smarter. And that's truly how you're going to differentiate and win. And if you have too much money, it's almost impossible, if it's in a household, if it's in a company, if it's a nonprofit, for you not to develop bad habits and just get lazy and say, well, I'll just buy my way through it. Marketing functions. It's so much easier when you have the money to throw it away. But when you have less, you have to deploy more of that creativity. And that's really how you're going to win and distinguish yourself and have a bigger share for yourself.
You've built a whole ethos around doing good, right? Healthy brands, ones that are societally responsible, being transparent about marketing and branding. Talk a little bit about how businesses can grow their companies, but also have a societal and cultural impact that is aligned with their mission and vision.
So there's two myths that I want to disavow, disagree with. One is that you must have a social mission for your company, that like a marketing or whatever. It has to be true. You need to really, really feel it for it to be authentic and for it to work. And so if you actually care about your idea and your idea can actually do good for the world, I think we'll get into why I think it's better. But businesses by their nature are providing a product or service that people want. So just by that, as long as they're doing it with integrity and ethical behavior, they're adding value. They're generating jobs. They're generating value to the consumer. So I find it very dangerous when a company invents a gimmicky mission, because the consumer is far more sophisticated. We all have a sixth sense because we kept getting barraged with bullshit. And so we're going to be able to tell it and smell it, maybe too much of that analogy. But I think you just need to really be authentic. It needs to really be in your heart. The second myth is that you have to choose between making money or doing well. If it's authentic and it's driving, they can be, in Kind's case, we came up with a product that was healthful, delicious, and had social impact. And I don't think there was a situation, of course you need to make choices, of course not everything is, you have to make hard decisions, but as a general proposition, having authentic purpose should drive your performance, should not be a cost to your performance. If your purpose is authentic, the consumers are going to value, appreciate, and admire you. If you're consistent, people are going to know what you stand for. If you're bringing them value and doing it in a way that's purposeful, where the how matters, where you're acting with dignity and respect, people are going to be more passionate about you, and your team is going to be so driven, because at Kind, everybody was a shareholder, and everybody drank the Kool-Aid of recognizing that by putting kindness front of mind, all of a sudden the culture was a higher performing culture. We were there for each other. We're working harder for each other. It was a we, not me. Everybody was equal. Everybody had an opinion. We created a hearty debate culture, and we just perform better as a result.
So right now, your portfolio of companies includes Berries, Live Well, Well Labs. Now, so you're expanding beyond that CPG space. Talk a little bit about the strategy around that. It seems as if you're building out a holistic strategy long term, and how those brands kind of complement each other.
Yeah. So, the way I tend to think of things, so a lot of what we do is centered on consumer health, and Kind obviously was a foundational pillar to that. The way I usually see things evolving in that space is you have an education wave that gives way to, what I call an availability or access wave. And so in the sense of Kind, one of the first areas we started learning about how to impact our health was you are what you eat. There's still a lot to learn there, and there's still a lot for our food system to change, but Kind was one of the first solutions that followed that wave and gave people the opportunity to do that on the go. We now see that taking on new ways for consumers to do that. Obviously, exercise is becoming very central, and the idea of Barry's regimen, which provides strength and cardio, is core to that. And what you see is that's not that's not a business built overnight. That's a 20-year-old brand that has a devout following. And so we tend to look at these things because there's a lot of trends that will pop up, rise and fall. We really like to see endurance and efficacy in the businesses that we look at, and that in that, you know, that basically the consumer choice, it's going to be when they feel pain in their pocket, it's going to be the last thing that they cut, right? They're going to cut other things before they go to trying to strip that expense from their budget.
I just want to say that as she was talking, Stephen and I realized that we have this superpower. If I really want to get under her skin, I can go like this. Oh no, it didn't give us, earlier it was giving us that, "Wah!" So we can just mess with her. And that's innovation. Like, I'm really excited about trying that out. But when Elle was, I'm going to translate to human language from this genius, when she means efficacy and stuff, what she's saying is a brand that's truly delivering a service or product people appreciate, because there's so many claims and it's so easy. We have a country of 330 million people. We have a globe of billions. It's very easy to fool some people some of the time and get to some marketplace. But eventually, if you're not delivering of something that people really value, like Elle said, then people are not going to buy it again. So her job is to find something that people are deriving value from, that they're going to continue wanting to go back to. And particularly in health and wellness, there's a lot of claims that are not really verifiable, and sometimes people in their experience don't feel that they're getting their money's worth, and then so they cut that off. So we're trying to look for things that in the long term have staying power.
And that was a key aspect of Kind. You know, we were always conscious to, I would say, under-promise and over-deliver. And I think in really competitive spaces, you see a lot of businesses that do the opposite. You know, maybe lead with a stretch of the promise, and while you might have short-term wins in that, it will catch up to you.
Well, you've talked a lot about optimizing for impact and durability. So that's switching a little bit of the mindset, right? As the founder mindset that's really focused on valuation, like how do you kind of reframe that so that founders are also thinking along those lines?
Partly, I think that's just how I've always approached things, but it certainly taught me that when you're long-term oriented and relationship oriented and transparency oriented, those are values that actually are going to create more value than when you're transactional and short-term oriented. And unfortunately, in a lot of our economy, we are rewarded by just looking for a liquidity event, which was language I didn't understand when I was building Kind. Trying to just monetize, trying to just work in 3 to 5 year cycles. And the advantage that you have if you think differently is that you're actually going to outperform, because you create more value when you create a brand that has authentic meaning. What is a brand? A brand is a promise, and a great brand is a promise well kept. What does that mean? That when you buy that yogurt, when you buy that thing, you know what you're getting, and you can trust that product or service, and you know exactly what you're getting. The longer that that brand is affirming what it is, and you can trust it, and it's truthful and it's real, the more that that brand value goes up. So Kind reached over $1 billion in revenues, but far, far higher in value, because people trusted that that brand was going to continue creating that value. And so just having a long-term orientation, I think, is a key to differentiate. I was making fun of how I can try to compete with that award, and in the meantime, I think I dressed the wrong way, because every few seconds this thing like does, and I'm like really afraid that I'm not going to Barry's, so I'm going like this all the time. So I don't know what to do now.
The divergent thinking.
Barry's, not Barry's. See, you should go to Barry's.
Okay, so going back to that question, what are...
Not Barry's?
I mean, she goes to Barry's, I do not. But then again, I don't go anywhere else, so I'm going to keep I should keep everything close. Success metrics then, right? I mean, you know, we at Inc., we are constantly publishing about, you know, annual recurring revenue, exits. Like, what are the success metrics then when you are talking about impact and durability?
I mean, There we go. You know, a business is a business, so your financial performance and durability is always something to look at. And so we're typically looking at, you know, the durability of revenue growth. You look at profitability to understand, is that revenue growth that is being paid for? Is it organic? When it's organic, that usually signals, to me at least, a stronger product market fit or service market fit, because the good or service is doing a lot of the work for the business. I think, you know, I really look at teams who are obsessed with their customer and their stakeholder problem. I think, you know, the thing I learned is that you're going to have a flexible mindset and pivot a lot. And so the obsession with the problem you're solving becomes your anchor, and teams with agility in kind of how to solve, how to address will typically win. And so those are things that we're typically looking at.
Right, yeah. Just to build on that, I think King or someone once interviewed me, and I talked about how I hated looking at financials, and I almost never looked at financials. And it's important to understand it's not because I was not obsessed with performance, and we outperformed everybody. Just to tell you first to both, so you understand then the method to the madness. But well, I'll tell you first the method to the madness. We looked at the underlying things that then implied the performance in the finance. So the obsession with the quality of the product. We were obsessive about the product. So like Kelly said, with the consumer experience, so people would be happy. Looking at the underlying things that make things work better and better and better. And I always understood that if that happened, the financial performance will be there. And so we had probably one of the best financial performances of any company at any time. Like first $75,000 got me to my first big private equity investment. By that time, we got a valuation of $45 million, and we got that $5 million investment. We never needed that $5 million because we were cash flow positive, which means that we were making more cash than having to need the working capital to grow. We were profitable, and we were growing triple-digit growth, doubling revenues every year on average for 10 years in a row. So we were like a rocket ship in terms of financial performance by not obsessing with the short-term financial performance, but obsessing with the underlying drivers.
I mean, right now, I think there's so much of a focus on fast growth, raising capital, massive funding rounds. What should founders be looking for when they're thinking more in terms of, you know, the investors that they should be seeking, you know, the capital infusion in terms of building for the longer term?
So, I mean, first I would say every sector is different, right? There are, you know, capital-intensive businesses that require some of those mega rounds. But, you know, I had former colleagues from Kind go to other consumer businesses that were raising mega rounds, and their experience in that was actually a bit of what Daniel said earlier, the lack of discipline it led to within the organization, the spending on marketing because they had the dollars to spend. And so I think, one, you have to understand the sector you're in and what the real capital requirements of it are. You know, if I were a founder, and the founders that we do talk to, you want to make sure that you're interacting with people that understand your vision and then the core drivers of it, because you can be pushed to fast growth that might sacrifice. So for us, we had really strict nutrition guardrails, right? It was very constraining over time what we could create within Kind and what we couldn't. And the wrong investors or a valuation that we felt buried under or needing to prove would have pushed us to maybe be more flexible on those and break the brand promise over time. And so I think you want to make sure that the conversation you're having, you're really kind of testing for that alignment. And is that counterparty or that future partner going to be one that helps me determine the right pacing, but importantly, make those right strategic decisions that keep that intact over time?
Can I
Yeah,
quick
of course,
things
please,
on that?
please.
One point is try to look for smart money for people that are not just going to write you a check, but that can add value, that can really be mentors and help you and have seen it and done it and can help add strategic value. And the other point is, you're messing, were you doing that on purpose? Que cabrona. Oh my God, did you see that? Oh my God, that's for me. What's your excuse? You don't have ADHD. The second one, I'm not going to let her get under my skin and make me forget. The second one is, as a rule of thumb, because Elle is right, in every sector it's different. In some sectors you do require a lot of capital, but as a rule of thumb, you want to perfect your mousetrap before you pour water to make it grow. So directionally, work on your product and service. A lot of us entrepreneurs want to run, and start selling a product or service before it's been optimized. And so then it's very inefficient because you're wasting so many dollars. And if only 1 out of 10 people that try your product, are you still messing with me? If only now Bonny is messing with me. If only 1 out of 10 people that try your product or service buy it again, promoting and distributing is so costly. Whereas if 9 out of 10 people like your perfected mousetrap, then $1 extra of investment is just going to go so much farther. So as a rule of thumb, really obsess about perfecting your product or service and then bring in the investment, which will be at a somewhat higher valuation because there's less risk to the investor, and then just put that money to scale to fill up that white space. That's the rule of thumb.
So, I mean, that was what I was curious about. Like, talk about the investor-founder relationship, and like, what are some things that you take into consideration when you are assessing founders that you're considering for growth?
Well, I go back to, the first thing is I want to be interacting with someone where I can tell that the problem they're solving, it wakes them up at night. It's the first thing they think about in the morning. It is an act of obsession, and because it's not a linear and up and to the right journey for almost any business, and so that is going to be the foundation that picks you back up on a hard day. And so usually I would say first I'm looking for that. Then I usually want to see like the right amount of porousness or mental flexibility. Too much means it's not a person who's got their hands on the wheel, like they're not waking up with a strong opinion about I'm charting this path and this is the way I'm driving my business today, tomorrow, the next day. A lack of it means that they're not responding to data, right? And so I think really, I often even just like watch how a founder is physically processing a question. And I like to see, like, do they have like a mental ping-ponging? The founder with the answer right away is usually concerning.
Oh, interesting.
I think what she's saying is that it's a really interesting thing, right? It's a fascinating way the way you answered. I really liked it. But it's, again, to translate from genius to human, it's the balance between being very passionate about your idea, your vision, your convictions, but receiving feedback to adjust, because every one of us is imperfect. And if we think we have all the answers, we're going to mess it up. Whereas if you're introspective and you're learning from the mistakes, prior to Kind, I had 10 years of failure after failure after failure after failure. And I wouldn't even call it failure. Mistake after mistake after mistake after mistake. But those mistakes taught me so much that that's why Kind hit it so out of the park. I would have not achieved Kind if it wasn't for the 10 years of Peaceworks. It was a business where we had Israelis, Jordanians, Egyptians, Palestinians, and Turks trading with one another, making a line of sun-dried tomato spreads called Moshe Pupik and Ali Mishmumken's world-famous all-natural gourmet foods. I still don't know why it didn't work out. But it taught me a lot of lessons. That's why next time we just named it Kind. Just 4 words, 4 letters.
I mean, you have built Kind on a very transparent, steadfast mission. What are some of those decisions that you made early on that in terms of staying true to that mission, that you think a lot of founders should incorporate?
The most important was what Elle said earlier about strong guardrails, because when I was doing Pieceworks, I wanted to be everything to everybody. And I also was, I don't know, dumb, stupid, you can choose, but I didn't know what I was doing. So I literally I had a lot of grit, but I didn't have wit. So I was going up at 6, 7 a.m. in the morning. I'd start on 122nd on Broadway. I had a Stanford law degree, emptied my legal books and filled it with Moshe Pupikan and Mishmunkan sun-dried tomato spread and pieces of bread to feed to the potential buyers to try my product of cooperation between peoples. Because what was driving me was bringing people together, which is really a common thread to almost every venture I've done. And I didn't really know about the fact that this is going to sound stupid, but it's true. Bloomingdale's and Macy's, are you familiar with those department stores? Or a bodega convenience store. I didn't understand that this product belongs here and this one there. I was trying to sell the same product to everybody. And so I was just making a mess out of it and making so many mistakes. And in wanting to be everything to everybody, I wasn't minding the quality of the product. The first 3 products were actually very tasty. And then we launched another 4, which were good enough. And then another 3, which are kind of shitty. And then 3, which are horrible. But everybody told me, just fill up the shelves. You have good relationships. You got these products. You need to get more products. And it was the stupidest way to build a business, because if you've trusted me with that sun-dried tomato spread in spite of my name, and you like the product and you go and buy it again, and then you're like, oh, he brought out something new. Let me try something else. And all of a sudden, you try that 15th one, and I disappoint you, and you feel I betrayed your trust, and you'll not just stop buying that product, you'll stop buying the whole line. So you really need to obsess about your brand promise and your guardrails. Say, what am I and what am I not? What am I going to do and what am I not going to do? What do I stand for? So the consumer understands what your brand stands for and understands what your company's promise is and knows that they can trust you.
That's perfect. Did you want to add it? All right. I think
is that helicopters coming?
That is helicopters, and I think we're pretty much out of time. I would ask one quick question, if you had one incremental dollar of capital, where would you tell founders to invest it in their business?
I think if you have one incremental dollar, buy a lollipop. But
I would say differential talent.
What she said. I really think our product was amazing at Kind. Our people were the biggest differentiator, because the people make the products and the people make the culture and the people do the performance. So finding incredible talent, and it's very hard for you to put your ego aside to identify the most extraordinary talent. And we really at Kind, still today in our industry, in the food space, if they worked at Kind in the golden years, people want to hire them, because we brought in incredible talent, but also created a culture where people understood how to work hard and be loyal and not that one, and have fun. I mean, can I just say one last thing?
Yes, please.
I love talking about this story. Taylor always cringes when I talk about this story. We had a fart machine hidden in my office. So we had a long desk like this, and we just liked having fun. Give me a second. He's like, what? And we brought in, I'm not making it up, celebrities. I'm not going to mention who, but you know, a lot of like A+ celebrities, dignitaries, former heads of state. And they would sit down and would have a conversation. And it was a remote controlled fart machine. So I would be sitting there, and after like a minute or two, I would let the machine go. And the person's like, oh, it must be something else. And then I wait. You have to really pace yourself. And 3 minutes later, another one. And then 7 minutes later, till the person was like embarrassed as hell, what's going on? And Kelly Q, who was our head of strategy, ideated this genius idea that the fart machine shouldn't be on this corner or on this corner, but right in the middle, hidden, so that there would be plausible deniability, and the two people were blaming each other. Like, I'm like, Kelly, why don't you apply your creative and strategic genius to buying good companies rather than where the machine was? But we just had a lot of fun, and we laughed a lot, and we worked really hard. But when you're working really hard and committing to excellence, it's also important to not take yourself so seriously and to just have fun.
Thank you. On that note, have fun. Daniel Lubetzky, Elle Lanning, thank you so much for joining us today.
Thank you, guys.